that takes us on to our final segment of the day, which is our panel on the keys to Proptech investing. I guess, pardon the pun. But yeah, so we've got Shelley Trung from Second Century Ventures and the Reach Australia Accelerator Program. We have Steve McDonald from the Proptech Connection and Ivan Sandio from Navanti Finance. And it's great to have such a group on, but also a group that represents sort of investors, active investors in Proptech, but people who use it from different lenses. So I'd like to maybe take this opportunity to give everyone a bit of an intro. Shelley, you there? Do you want to kick things off?
Yeah, sure. Thanks for that, Jay. Hopefully you can hear me okay.
Yep.
Yes. Hi, everyone. Great to sort of Zoom you all. So Shelley Trung, Managing Partner for Reach Australia. We're backed by Second Century Ventures, which is the venture arm for the National Association of Realtors. I'll leave that for now, very short and sweet. I'll elaborate what that all means in a little bit.
Okay, cool. Steve McDonald?
Sure, I'll follow Shelley's lead in keeping it brief, and we can kind of unpack more later. But yes, I'm the co-founder and the Australia partner of the Proptech Connection. We have offices in Chicago and here in Australia. Ultimately, what we do is we work with every person in the ecosystem. So with funds that we source some deals from our network. We have over 10,000 companies within that network, and we match them to their investment mandates. From the tech buyer perspective, we help them source best-in-class technologies. We feel that we break away a lot of the noise and actually deliver something that's curated for their portfolio. And then from the Proptech perspective, we help them land and expand, obviously raise capital, and then obviously some business development stuff as well. But I'll come on to more of that later.
Terrific, thanks, Stephen. And Ivan. Welcome.
Hey guys. Hey, thanks for having me. Ivan Sandio from Navanti Holdings. We are an investment company. So we invest in diversified investment. We operate the business as well. We've been investing in the last 15 years. We also, the one who started 11 Space as the incubator. So we have our own incubator. We started to invest into technology. And the first few investment that we made was initially into Proptech in Singapore and in Indonesia.
Great, thanks, Ivan. So just I think to kick things off, it's definitely worth just understanding the sort of exact lens that you guys are looking at the sector. You've obviously sort of given us a bit of background there, but I think it's keen just to really understand who are the sort of back end stakeholders and what's driving their sort of investment process and investment thesis. So yeah, I'll go through the list again. Shelley, do you want to kick off?
Sure, thank you. So we're the Reach Accelerator Program is a scale-up program. And as I mentioned, we're backed by Second Century Ventures, which is the venture arm for the National Association of Realtors, NAR for short, SCV also for short, if I sort of interchange between those, bit of a mouthful. So, Reach is the scale-up program. We focus on sort of late seed to Series B companies. Mind you, we've got the occasional unicorn company in there, $300 million companies coming to us. We're sort of focused on companies that we feel we can help them 10x their revenue. That's sort of the great, the basic thesis we have in mind when we look at companies. Can we help them 10x their revenue into the real estate sector? And are they ready? Are they ready for it? Because a lot of them are at idea stage, at MVP stage, and just not ready. They don't have their team set up. They don't know their customers very well. So that's sort of the lens I take. Being backed by a US venture arm, National Association of Realtors, we are actually backed by the world's largest trade organization. We're actually backed by a not-for-profit as well, which is kind of unique to have a for-profit venture arm focused on the real estate sector and improving the real estate sector. our parent company is, like I said, a not-for-profit, an association for realtors, which is sort of real estate agents in the States. I know we don't really use that language out in Australia. So, you know, we have 1.4 million real estate agents as members. You know, some of them are residential, some of them are commercial real estate. But over time, you know, our funds evolved. We've been around actually 10 years. We've invested in a bunch of companies, well over 140 now. A couple of them, some people might know, they include DocuSign. DocuSign was actually one of our very first investments. Notarize, they did 30 million Series D recently. Updater is another one that some Australians might be familiar with, because they did originally list on the ASX, and now they're really looking to list in the US. So the lens I take is really scale-ups, but not necessarily ones that are, you know, prop tech, if you like. You know, DocuSign is not really what we would call traditionally prop tech, given that we invested 10 years ago. Notarize also is what you probably classify as legal technology, notary services. And Updated does moving services. So it is a range of companies that we help them launch and access into the real estate sector. And again, our goal is to help companies 10x their revenue. And my particular region, I take care of Australia and Southeast Asia. So we do about 6 to 8 investments a year. You know, and again, our goal is to help the real estate sector understand technology, adopt more technology, but also help companies launch into the sector.
Great, thanks, Shelley. Stephen?
In terms of what we do, we break it up by actor, as I said. From a tech buyer point of view, we work with them in terms of understanding exactly what that commercial problem is. We have a very disciplined approach to that, and we're quite unique in the market. We've come at this from an experience base of working for major REITs and also working for major venture capital funds in the space. So we've probably seen about 1,500 deals, but we've also got that real estate nous as well. And the benefit of being able to do it from the bottom up is you're then able to articulate the value prop to the tech buyer. And that's one of the main problems with adoption globally, is that each portfolio is nuanced. So just because 2 companies have a shopping center, their need and how they derive value from a tech is different. So because we understand that, and because we have the network we do in terms of Proptech, but we also have over $1 trillion worth of assets on our relationship clients books at the moment. We're working with major banks, for example, major REITs, the largest agencies, and we're able to kind of shape that database that we have towards those tech buyers and allow that adoption process to be a lot quicker. So you see time and time again, when in my VC hat, when I was back in doing VC, they were all targeting the major REITs, agents, developers, when most of the time it probably wasn't the best go-to-market strategy, but they just thought they had to do it. And it's because there is that nuance within real estate. And on the VC side, we have access to something like $3 billion worth of funds that will write checks from 25,000 to 200 million. 75% are probably in the US, and 65% are probably Proptech specific. But again, going back to that nuance point, it's very hard to apply standard VC metrics, CAC, LTV, average contract value, whatever it may be, to the Proptech scenario, because it's not that scalable that quickly. So we do that translation process. And again, it goes, the analogy we use is, if zeros knock on the door in terms of transaction, by that highly disciplined, highly data structured process that we do, we get the process started at 0.6. And that means that we can actually facilitate the release of capital. There's a lot of dry powder lying on the sideline looking to get into Proptech. We spoke to a private equity fund last week that's looking to come into the market, has $9 billion assigned for SaaS products in fintech and Proptech. And they're just kind of wondering how they can get into that market. So we're very structured in what we do. We have 40 venture scouts across the world that feed us in deal flow. I'm regularly on calls to Brazil, Israel, France, Singapore. I've had 3 calls to the US already this morning. So we've got a pretty good pulse of what's going on in the market. And as a result, we're able to give some pretty good insights into regional plays, but also what that means from a tech buyer perspective or a VC perspective.
Great. So Ivan, I know we lost you there for a second. So the question was really just to try and understand Navanti's lens when looking at the PropTech sector. And I know you've got a little bit of a different spin there, because you've got a very strong links with Indonesia and I guess that cross-border relationship. So keen to hear your views and your lens on how you look at PropTech investments and the sector.
Thank you, Jay. Yeah. we started our journey in investing and put into property right from the brick and mortar side of things. It wasn't technology back then at all. So we invest in a developer company, which is a developer as well. We also invest in a company who's actually becoming the money mover. I call it the money mover from Asia. So the idea was actually to create a safe investment lending platform for the Asia money to go into Australia. And we moved probably $600-700 million in the last 10 years into Australia from Asia money. And right from there, we started to do asset management as well. So it's all real businesses. We managed around 3,000 property in Australia. That's probably about around 2 billion worth of asset that we manage, both commercial and residentials. And then, so we try to complete the whole ecosystem. So we become a very end-to-end kind of thing. So we started to do renovations. We do our own development. We built 22 sites on development here in Australia too. Then in the last probably about five years, we started to be actively looking for investing into the technology side of things. So about 4.5 years ago, we made our investment into one of our platform called iCondo, and that's actually from Singapore. Now they are the largest in Singapore in their own category. So they manage, it's a residential management app. So they actually manage apartments, buildings, and they are by far the biggest in Singapore in comparisons to the 3 next competitors combined. So they manage more than 330 building complexes, and they're in Indonesia as well in partnership with Colliers, with Savills, and also in Australia as well with us. We invested during the seed fund, and then we took them into Series A. It reaches 35 million on the Series A, and now they're on the way to Series B. Probably in the next 12 months, they're looking to 200 million of valuations. Looking fantastic. So yeah, again, connecting to what you said earlier, Jai, we have this strong relationship within Indonesia and Australia because we working together with the government as well to improve the relationship between the two countries. So we want to try to interact more startups between Australia and Indonesia as well, to pretty much to connect the Southeast Asia into the Pacific. That's why we actually built 11 Space. If you guys want to check it out, it's 11 Space. You can find it in IG or whatever. It's 11DHS Space. So it's actually an incubator that acts like a business hub. So it will actually connect the two countries. So we do a lot of exchange, or startups exchange, information exchange. We do a lot of incubator program inside them as well. So hopefully there's going to be like a ecosystem and then the business farm for investment to play with. Indonesia, obviously, it's a very sexy market. So just to let you guys know, 270 million of people, one of the largest economy, if not the largest one of the largest in Southeast, if not the largest in Southeast Asia. They were planning to become the 5th largest economy by 2030 in the world. Now, but it's very funny. The property technology, Proptech in Indonesia, I think is being actually, how do I say, mainly being the player. I have to be careful here. So most of the people who's in there is non-Indonesian. The big guys who's coming in there is actually owned by Singapore or by Australian. So the largest media company called Real Estate Australia, REA, made a move into Indonesia. They bought the one of the biggest platform called Rumah 123. Is actually the same guy like here, realestate.com, right? And in iProperty from Singapore. And then there's another platform. There's so many platforms being acquired by Singaporean company as well. There are a lot of different companies that are trying to come out. My friend came out with Bobo Box. I think that's very interesting. They create a new way of staying in a hotel experience. Now they started to create a Bobo cabin. Because of the COVID, so they created a cabin where people can hire a cabin inside the woods. So it's really amazing. Yeah. And just lastly, I think the types there, people are the Proptech there. It's either they're working on creating a better search engine on property, or creating a more like a co-working space, which is we are in there as well, or finance lending into property, and then probably to connect more contractors and vendors into the property industry as well. I think that's a little bit about it, Jai. Yeah.
Thank you. And Stephen, yeah, I'd be keen to hear on some examples of some companies that you've been working with as well. I've heard from Shelley and Ivan, but just on companies that you've seen that are quite hot or exhibiting some real value in the market for your clients.
Sure. we're working with an APAC company at the moment that's raising Series B. Construction technology, a kind of health and safety angle, but it's an interesting play because it's in a niche market in terms of where the big guys won't go, but obviously there's a lot of construction there and it's very people intensive, so there's a good data play there. We're raising for them. Within Australia, there's a couple of mobility plays that we're working with. There's a mobility play which is Series C for memory that we're dealing with Europe, and we are about to close a mandate with a company in Spain which has got a pretty good take on the smart locker play. So that's probably just a good flavour of it. But there's a lot of deals out there at the moment. And I guess from a kind of trend point of view, it's quite interesting now what we're seeing, because there's two key trends, I would say. There's a move towards consolidation. You've got the kind of grown up Proptechs, which now have significant balance sheets. So we spoke to a very well-backed Proptech last week that's on an acquisition spree. So I think you're going to see mass consolidation in the market, particularly in certain verticals. And I think number two, we're starting to see senior people within real estate organizations now moving into Proptech, and because they have that nous and that network, they're going to be very, very successful, I think. So they've kind of seen the mistakes that the younger companies have made, and now we're now seeing those people move into the market shows, I think, a level of maturity in the Proptech market globally.
Yeah. So and that's kind of leading to where I was going. It's so Crunchbase reported that VC-backed companies raised 10.6 billion this year so far versus 8.6 last year, and really the trend in VC, it's being echoed in PropTech that it's fewer deals, bigger tickets, and people are and the money is now squarely focused upon scale ups and where that's going. So Shelley, I'd be interested in understanding, with real estate starting to heat back up in the post-COVID world, where do you see the most valuable opportunities from your angle?
Good question. By the way, Stephen, I'm super distracted by your seaside background. I'm very jealous. I want some background information on that offline. But yeah, I just noticed that. But yeah, so in terms of scale ups, look, as myself as an angel investor, I've been on this journey for a little bit while now, and I can sort of understand the sort of evolution of ecosystems overall. I used to live in Boston and New York, and spent a bit of time in London as well. And in ecosystems change, evolve, mature. They have certain flavors. And I actually think during COVID, it was, and mirroring what happened in the States in terms of GFC, I wasn't there during sort of the start of the GFC, but I moved over there to buy real estate about 2 or 3 years after the GFC happened, because I saw a great opportunity to buy real estate. And, some of the people here might not realize is PropTech sort of started as a result of that sort of stress and need to clear the stock, the more transparency, more customer service, the sector needed that transformation. And so I think, during this COVID, situation, I think things have certainly, mirroring also what Stephen said, like there's a lot of dry powder. I think there's a lot of opportunity. I do think, seed stage capital, there are less sort of focused deals in terms of early stage companies, but I think the ones that are getting traction are certainly getting capital. If anything, our companies, have been actually doing better over COVID because people have needed to go digital like day one. They've just kind of called our companies in a panic and said, look, we need to go contactless. We need to go digital. How do we work from real estate being a real asset that you visit every day to monitoring from home, right? To managing tenants from home. So I think that's certainly, an evolution that we're seeing. A couple of companies, obviously, we've invested in, again, not necessarily. The way we see PropTech is actually helping companies that are technology-based enter the real estate sector. So we're not just solely PropTech companies. We're really just looking at a diverse set of companies that we can help support to grow into the sector. So the demand for a lot of this technology has really picked up. And I think in our region, again, comparing to the States, we are so in that early cusp of growth. There's certain regions like Indonesia, which I want to definitely learn more about, and Philippines, that there's a thirst for technology. And there's a massive population, Philippines and Indonesia, where there is a young population, tech savvy, you know, and they get technology, you know, and so as a result, they're actually really, you know, asking for efficiency from day one. You know, they can't understand why you can't do something via an app quickly. And so I think there's a lot more demand and opportunity in this region. The valuations are certainly very good compared to the States. And so plenty of opportunity, scale up or startup phase. I think just, you know, investing alongside a group like you guys is obviously really helpful. I don't want to sort of bias my portfolio, but, you know, obviously Ubi Park and Superdraft have pitched you guys as well. And both of those companies
great
are
companies.
They're not, I mean, again, scale up phase, Series A, Series B, both of them, you know, I sort of don't want to take over the panel, but, you know, in terms of, you know, the growth sector of those, Ubi Park 10x their revenue in 6 months this year for 2022 contracts, right? This is a sort of lens. Wow. This is a sort of lens we sort of say, when you come into Reach, we'll help, you know, if we can help, if we feel like we can help you 10x, you know, not necessarily like by 9 months, because that's how long our program is. We can't, you know, it's sometimes a bit unrealistic to do that in 9 months, but they graduated 6 months ago, you know, and they've signed 10x of contracts for 2022, and they're only like, it's July.
That's incredible.
You know, it's July, you know, they're 6 months, you know, into graduation. And so we've already done that for one company, you know, I'm sort of halfway into my second cohort. Superdraft, again, has now 3 US investors on their Series B table, including us. So they're an architecture design company. Ubi Park's a parking solution that goes into airports, shopping centers, you know, and they're selling internationally, and they've been in lockdown with me in Melbourne for 5 kilometers for like 6 months, you know. So, you know, I think COVID has been just a great opportunity, you know, and again, we continue to see great growth in our companies, but at the same time, we're actually recruiting for our next cohort. So I can talk more about that later on. I've sort of talked a little bit too long on the session already.
That's all good. It's all good. They're great insights. Moving on, I'm keen to sort of understand risks as well, or fundamentals behind investment decisioning. And I think, Stephen, you know, you'd be a great person to give us your lens on that, because you sort of started talking about how, you know, how things are different to traditional venture investing, and you've sat on that side of the fence. So interested to hear a little bit more about that, and then also from Ivan as well on this, because you know, you've obviously got assets across the whole property, you know, the whole property ecosystem. So yeah, interested to hear your views on, you know, just what's driving your investment decisioning when looking at Proptech investments. Stephen, you want us to kick off?
Yeah, like I think Proptech's broad in terms of definition. I mean, you can include smart cities and mobility, right down to listing portals. So I think where you're seeing the movement of capital is actually towards high transaction vectors in the space. So construction, residential, and it's because of cash flow. Obviously, if you're a fund, it's all based on IRR, but if you're a Proptech that's raised funding and you have a 6 to 12 month lead time to secure a client, which might only be a $50,000 a year proof of concept, then that's a very expensive way, because cost of acquisition is very, very expensive. So from a VC, you need to be, well, from our experience and what we've seen in the market, there needs to be a very strong demand if you are going to go down the commercial sector for that product immediately. And that is ones that we are starting to see, particularly in the US, that done well. It's effectively just a function of capital and the usage of the assets, right? Because the commercial buildings aren't what they used to be. So we've started to see a lot of the funds now move into single SFRs, they call them the US, single family residency and multifamily. So then what you're seeing is on the back of that is a range of amenities popping up to service those multifamily built around products in the US. And again, that's just a function of the land prices gone up so much that the investor has to charge a certain weekly rent. And to be able to justify that weekly rent, they then need to have the amenities to make that worthwhile. So that's what I mean. It's very different from that Spotify example where you say, we're going to streamline music and no one uses CDs anymore. And that's a 95% use case across the world that everyone gets. It's very specific to the person, the end user is actually buying it. And that's why you're seeing those patterns that I just described.
Great. Yeah, thanks. And Ivan?
Yeah, I think for us the most important thing whether the startup that we invest in can be linked into our ecosystem. So number one, if it's a no-brainer, if it's a captive to what we're already doing, because we can leverage so much from what we have at the moment. So that's number one. I think that's key, because straight away I think that's given. And then the rest of the thing is that whatever can in line to our vision, to our investment vision as well. That's also important to for us to into investing to complete the whole service provider within the ecosystem itself. And yeah, with the way we do it in here, so every investment that we do, obviously we have our own board and we have our own mandate and criteria of what we do, because a lot of the thing that we invest is through our own funds. So we have another arm that we involve in external investors. So external investors obviously have their own appetite and mandate. We have to follow that, but internally it's just to whatever following our visions, we will invest in there. So we also invest in Homely in Australia. That's number 3 platform in Australia for property search. And that's interesting. It's a very interesting space because we are in a real estate as well, on the ground as well. And every single investment that we made, they have to go into our incubator somehow, somewhere. So probably that's the way we try to reduce the investment risk, put it that way. And within that, that's a lot. You know, if you unfold what's inside the incubator, that's actually what's actually filtering every single startups.
Yeah, absolutely. And just to follow on from there, I mean, you did sort of mention risks and but also it sort of makes me think about adoption rates of that people have been, there is a risk element associated around the adoption of Proptech technology that has maybe held back the sector. But I'd be interested in whether in your experience, do you feel like the sector has been held back? If we compare it with other sectors, it is probably a little slow. Do you think there's a reason why it's lagged so much? And do you also feel that it's lagged in Indonesia as well?
Well, I do. I think I do feel there's a lag in the Proptech, not as fast as the rest of the technology industry, the other sector of the technology, because I think, I think property is so traditional. It's just, I see a lot of the startup that came to us, they try to disrupt a lot of things, but actually on the ground itself, people are still hanging on to what is really, to the fundamental and really fun foundation, which is like, I have to have the human, I have to have the person. There was a Proptech that came to me asking for investment, and they were trying to disrupt the agency market as well. So they want to create an automation to manage property for residential, for landlords. And in the end, they didn't make it, because I think the sector is just, I think it's too old, and then just hanging on to the very core ways of they doing things. So maybe the sector just doesn't want to get disrupted as much as well. That's how I feel. Yeah.
And is it the same in Indonesia?
Oh, even worse. There's no regulation. The thing is, in Indonesia, I think we still have opportunity if we can create some sort of even a standard. There's no standard because there's no regulation. In Indonesia, there used to be no license for agency to operate. There's no license. Just my neighbor can become an agent. So I can sell my neighbor's house any day, right? And that's how crazy it is. And there's no singular platform in the past where we can find, like here in Australia, we go to realestate.com, that it will reflect the whole market in Australia. In Indonesia, there's none like that. So there's no trust account. There's no trust account. So whenever you purchase a property, you pay directly to the vendor, and you need to pay it upfront. Everything is just direct transaction. If they run away, you screw.
Yeah. Oh, so I've got a number of friends with war stories from trying to purchase property in Bali. So it's definitely a good dinner time conversation.
In there, you need jockey.
Yeah,
jockey.
Exactly.
Did you know?
Shelley?
Did you, on that point, did you know in the US you can actually be a real estate manager, i.e. property manager, without licensing also. So
Really?
you could actually collect.
Wow.
Yeah, I don't believe you can actually sell and buy real estate, but you can actually be the rent collector without licensing. So it's interesting because like I said, I sort of went to the States to buy real estate, and it was quite a pleasant, interesting discovery, I think the word is, that, you know, anyone can, you know, they might fall on hard times and they can't, you know, they'll collect the rent, but you don't see the rent. So yeah, there's a little bit of a Wild West in some of the US as well. So
yeah. And any input from you on sort of why you see that the adoption rates in technology have been lagging?
Yeah, so look, last lifetime, I actually spent 10 years in corporate innovation, my first sort of 10 years in the workforce. So corporate innovation, change management, you know, sort of corporate innovation is a lot sexier, that word these days, so I'm going to use that. But, you know, that I think what I learned during that phase of helping public transport, you know, like commuters are grumpy, you know, getting them to adopt technology, you know, back when it was Mikey or Opal in sort of in Sydney and, you know, for those in the UK, you know, different, obviously, you know, cards. But I was part of a lot of that sort of rollout for new technology, intranets as well. You know, this is how far back I've been in technology. If you remember, the word intranet used to be popular. And so I think for me, I learned that adoption for technology overall, regardless of the sector, is actually less about the technology and more about the person. You know, whether you're selling it to the executive who has to sign it off on his budget, or that actual employee at the end of it, you know, what actually, you know, using the software, you know, or the actual consumer at the very end, you know, who's time strapped, you know, has to make purchasing choices very quickly. So I think changing hearts and minds is frankly where the adoption is the challenge, and the technology is actually not, like, you know, you don't always get the best technology being adopted, frankly, you know. And so I think that in itself, understanding that for founders and investors is really important, you know. And this is where I think the real estate sector in particular, having been sort of buying and selling and renovating, you know, in certain multiple regions, real estate people are really special. And the reason for that is because we like hard assets. You know, we like stuff we can touch and feel. You know, I used to walk into New York offices with real estate groups and they would still have like newspapers open out like this, you know, because they like stuff they can touch and feel. You know, that's why they're in real estate, right?
Yeah.
And I think psychologically, you know, you need to understand that when you're selling to that person. They just psychologically that they're not getting the picture that you're talking about in terms of technology, the vision for that future. So you, as a technical person, the salesperson, you need to kind of make it so digestible that they need to be able to really see it and show them, you know, show as opposed to tell. I think there's a nuanced difference. But, you know, the real estate sector is very much death by Excel, you know, or death by spreadsheets. But I think if you know, the way we've been able to help companies launch into the sector is just understand some of this basic psychology. It's actually about people. It's about relationships. It's about making sure that, you know, you manage the risk for that corporate who has a $5 billion brand, $100 billion brand, and you're a great company, but you might be brand new to this, and there's a huge amount of risk that they're taking on. And for companies to respect that and to actually package it up in a way that it de-risks it for them. So this is sort of where I actually don't blame the sector. I think the sector just works in a different way, and it's about making sure companies and founders understand this psychologically, and you know, put their best foot forward, really.
I think that's a great way to finish, and also probably a door opening for Bruce Dell, who I know is still on the call, who presented earlier today with holographic technology. So you know, having properties as part of the look and feel journey for in visual format, I think is a really great way to help try and get the customers on board with your initiative. So thank you so much, Shelley. Thanks, Ivan. It was great to hear about a lot of the Indonesian angle and what Navanti are doing down here. And Stephen, always a pleasure, mate. So it's always good to bump into you around town, but also great to hear some of your insights today. So thanks very much, everyone.
Thanks, guys.
Cheers.
Thank you.
So that